Check out my SPX chart calls on TradingView. This green horizontal line target I projected was when chart was at the arrow. I called the rally would last over 6 months with a rejection at red horizontal line, which just missed my down move target. As the stock market hits my green line target I projected nearly 2 years ago, Bitcoin is crashing, looking weak and vulnerable, as the exchange cartels flush out all the leveraged traders they can before any moves up. This is a slight issue, as I thought Bitcoin top and SPX top would be when both hit my top targets. SPX has now hit, but Bitcoin is nowhere near it. Let's look at the Bitcoin charts. The 24-hour, not daily, CME chart I show here is on regular trading hours, as shown when you use the option to swap from electronic to regular. On the regular hours chart, we see the candles in a different light. There is a very dangerous candle that formed for Bitcoin. This is a bearish abandoned baby, and can be very bearish if confirmed by the following price action and candles. We see a gap here under this candle, and the next candle. Bitcoin would need to fill in this gap within the next 3 candles, or the bearish move will be confirmed. Using a trend-based Fibonacci tool, we see a 1-to-1 move for this would send price down to this 103,000 level. The max pain would be a move down to the 1.618 fib level. I think this is not so likely, as a bear market could ensue if this happens. The USDT chart shows, on the low time frame, there is chance for a drop with bearish divergence forming, which would give a bounce for Bitcoin and alts. On the high time frame chart, there is a possible hidden bearish continuation divergence forming, as shown by the white lines. This will only stay valid if chart does not get to green line shown and the LMACD does not get above 0. RSI must turn down and price reject at the same yellow MA55, forcing the RSI back under trend line. The line in the sand is the green line really, as mentioned multiple times. Above this line is very bad for Bitcoin bull run. On the Bybit chart, which shows just levels and POCs, I said the target was 118,000, which it just missed. In fact, the target for the inverted head and shoulders pattern was higher, and it was strange to see this crash, as the target of a confirmed pattern was not hit properly. From high to low using a fib tool, a bearish scenario has presented itself with a rejection at the fib pocket, which is common at the start of bear markets. This helped to causing a crash in the last day. Using a fib tool from low to high, we see the fib pocket for a retrace. A drop below this confirms more downside. Looking at just levels and POCs, we see the levels were front run at the last top. Price crashed down through naked POCs. I will now remove. Price touched the blue daily level shown, and is now trying to reclaim the value area low orange line, which, as you can see before, was a major level of resistance. Price must reclaim this to have any chance of a bounce that will last. On the Binance one-day chart, price rejected at the POC level and went down through VWAP support levels. It is now trying to hold the value area low and other levels shown. We can see the next support levels below. Should this crash continue down to the 103,000 level, so we watch for reclaim of this level and turn into support again. Currently it is now resistance. Also a close eye on CME chart to close that abandoned baby candle gap, or the 1-to-1 down to 103K will play out. Very hard to say which way from here, as this crash took me off guard, so keep eyes on the charts I have shown to help you get the direction correct before it happens. I would hope for a bounce if the bull run is to continue, now that millions of traders have been wiped out on this last drop. Thanks for watching.